Hi, my name is Arjun Agarwal. I wear a few hats.
Meet the founder of Inaam and a board member of the Iceberg Foundation.
We exist to help each other, and if there's no point, and there really is no point in existing if we can't. Building, scaling and growing Australia's startup ecosystem that I feel very lucky and privileged to be able to do.
He is a portfolio manager at KPMG High Growth Ventures.
The only way you learn by doing is when you pair the execution with the literacy. The biggest problem we found with young people, with the new generation of investors, is they want to invest. They just don't know how or where. You don't have to have insurmountable amounts of wealth to build more wealth. Doing good has actually, in our funds that we've backtested, returned 25% more than large equity funds. You need to find a problem, an actual issue, a pain point in people's lives that you can then find a solution to address. The only way we realize it's an actual problem for other people is talking to other people. It's not okay when everyone around you isn't on the same level playing field for no reasons.
Where big dreams meet bold action. Where we share real stories, actionable insights, and the inspiration needed to transform your ideas into businesses. Are you ready to turn your ideas into success and be an inspiration to others? Join Inspirepreneur.
Hi, my name is Arjun Agarwal. I'm your friendly neighborhood brown boy. I wear a few hats. I am currently the portfolio manager of KPMG High Growth Ventures, the founder of Inaam, and I sit on the board of the Iceberg Foundation, which is a mental health care charity. What am I currently doing? Trying to make my dent in the universe, and something I get up with every morning is making sure that I've done something to help someone along that day. I truly believe that we exist to help each other, and if there's no point, and there really is no point in existing if we can't. Building, scaling and growing Australia's startup ecosystem that I feel very lucky and privileged to be able to do. I'm also the founder and CEO of Inaam, which is an impact investing fintech, which is my life's work, and I sit on the board of the Iceberg Foundation, which is a mental health care charity that supports LGBTQIA plus folks, migrants, refugees, and displaced individuals with access to mental health care support. So that's a quick little rundown on the few hats that I wear. I'm happy to double click on that, dive deeper and get an understanding of how that has come to be. And that is stemmed from deep lived experience. I guess the reason why Inaam even exists and why it was started is deeply ingrained in my background, where I come from and what I currently do. We'll start at the start and then we'll get to why it exists, if that's all right. So, born in India, I'm from Nagpur, small city. It's famous for its oranges, for those that may or may not know it exists. Same state as Mumbai, Maharashtra, and then I grew up in South Africa, in Johannesburg. I moved there when I was about 6 months old. Sadly, I didn't really have much of a say in that decision, but very grateful that it was made. I was part of the born free generation, and so, you know, growing up in a post-apartheid era at the time, I was very fortunate to have had a privileged upbringing, but it never sat well with me that everyone around me didn't have access to the same things that I had access to, and so that's what I dedicated my time to doing, so that everyone could be on the same level playing field. And there is a point to this story in that, having grown up in South Africa and seeing all those things, it's not okay when everyone around you isn't on the same level playing field for no reasons other than they were out of their control and others in positions. So the organization that I spent most of my time with was called Africa Tikkun. It was started by the Lubna family. The patron-in-chief was none other than Nelson Mandela himself, and so we were able to contribute to community to empower young people to not only empower themselves but also those around them through public speaking initiatives, food drives, clothing drives, capacity building workshops, etc. And that, I guess, really built the foundation of what I would do from that point forward. Helped launch and scale an edtech startup called Ivy Space straight out of high school. How that came about, I ran into the gentleman in my lift, overheard them talking, I was like, oh, this sounds interesting, can I help? And they said, you know, you just finished high school, what do you know about running a business? And I was like, well, if I stuff it up, you can fix it, right? They were like, okay, well, for some reason they took a punt on me. I was an alumni from one of South Africa's largest education groups, so I helped do the introductions, and from that point forward, helped them launch and scale nationally. This was a startup that was founded by 2 Yale grads that were based out of Hong Kong, backed by the ex-VP of Alibaba and a couple of angels from Silicon Valley. So that was a good kind of way to dip my toes, metaphorically speaking. Shortly after that, caught the tech bug, helped launch South Africa's first blockchain fund with a close friend of mine in 2015. We didn't know what we were getting ourselves into. We just wanted to explore the technology, learn about it, and engage with it. And so we were trading across borders, understanding how ledgers worked, how the blockchain actually functioned, and we somehow ended up quadrupling our fund in 6 months. Got to the point where banks started reaching out to us. A close mentor of mine reached out to me as well, saying, hey, can I invest X amount of money with you? And I was like, are you listening to yourself? You should not be giving teenage boys this amount of money. It just doesn't sound right. And so, yeah, my friend and I took a decision to take a step back, liquidate the fund. Tulip bulb phenomenon started happening, and it was just a very speculative time. Probably my worst decision in hindsight. We were sort of 20 to 30 coins a day, actually, which were valued at $200-300 a pop. They're now, I think, as of yesterday, worth $100,000 a pop. So I make peace with the fact that we acted in integrity. No one lost their money, and I guess that's what matters more. We were chatting earlier, I'm the bad brown child in my family, so I'm not a doctor, lawyer, engineer, or an accountant. I have a double major in finance and economics because I thought that would be the easy way out, and this is where I guess the journey really starts to take shape. In my final year of uni, unfortunately I lost my father, and so I had to pull up my socks, stop doing crazy things, take care of mum, and I got a job in management consulting whilst finishing my undergrad with a state-owned telecoms business through a company called WNS. You may have heard of them, and that's what I did. Towards the end of 2017, we made the decision to move back to India so my mum could recover under family care back in Nagpur, and shifting back to India after 21 years was a huge dynamic shift from a cultural perspective, from an emotional perspective. Had to deal with two different sides of the family, so that comes with its own trials and tribulations. Tried to get a job, couldn't find anything. Eventually, through some warm introductions, ended up at a family office fund. It was a small $20 million fund. Looked after their equity portfolio and their venture strategy for a while, but got to the point where my growth plateaued and I needed to get out and go to the bigger cities. Applied to over 156 different jobs, got rejected by all of them. There were 3 asset management companies, Aditya Birla Mutual Fund, Tata Mutual Fund, and DSP BlackRock at the time, that actually allowed me to come for an interview. They said, hey, look, we love you, but we can't hire you. I was like, why? They were like, because you're only 21. I was like, what does my age have with my ability to work for you? Now, India is quite a conservative economy, and so they cited fiduciary duties and having to benchmark me to domestic grads despite the experience. So I was like, okay, what do we do now? One of them alluded me to the fact that Investec, which is a South African investment bank, had operations in India. I didn't know about this, and so I went onto the website and I saw the CEO's email address in plain sight. I was like, who does this? This can't be real. This can't be, happening right now. And so I wrote him an email. I was like, the worst thing that can happen is he says no or he doesn't respond. To my surprise, he had forwarded that email on to a managing director in one of the divisions, and they responded back to me. Flew down for an interview to Bombay. Excuse the French, I fucked up the interview. They asked me what the 2 core assumptions of the CAPM model were, which is the capital asset pricing model. This piece of trauma is ingrained in my brain. I knew what it was. I'd learnt these assumptions in uni. I obviously needed to know what it was, but they don't actually apply in real life. So I gave an answer. The answer was wrong. And the director was like, look, you're wrong, but we love your confidence. And I was like, great. Does that mean I get the job? And so I ended up, asking them that question. They, for some reason, ended up giving me the job. So I started off as an intern in equity sales and research, where I worked with the team, learning how global markets function and operate. Ended up building them a custom Bloomberg terminal, which the sales team still uses today. They kind of aggregate data together, and they couldn't do that in initial instance. They didn't have access to their data in real time with clients, and so I built a system that would help them do that. Then moved to the sexy part of investment banking, which is structured and leverage finance with the veterans of India and APAC's investment banking minds. Learned how the world actually operates and how money actually flows. Ended up helping close about $500 million in deal flow associated with setting up India's renewable energy infrastructure, both in greenfield and brownfield renewable energy, coupled with a few acquisitions with Blackstone, TPG, ADIA, and GIC Singapore. Got to the point where I was like, okay, what are you doing with your life? I had a roof over my head, I had food to eat, mum's health had improved, but I wasn't doing the one thing I love doing most, which is helping other people. So I worked with the bank's team and helped them set up a CSR fund where we ran our first campaign for underprivileged breast cancer victims and survivors with Sanjeevani in India, and then another campaign with Salam Bombay to get sports kits to children in Dharavi so they didn't have to just be cooped up in a classroom but could express themselves in other forms of expression. And then I was like, okay, in Hindi, you say kuch karna hai. We have to do something with these skills and this knowledge that we now had. And I'm Marwadi, so I come from, I guess, what you'd call a business or an entrepreneurial background, not too dissimilar from our Gujarati cousins. But jugaad, which is resourcefulness, only gets you so far. You've got to add some frameworks to it. And so I thought that's why we should study further. Didn't want to do an MBA or a master's in finance. I was like, who thinks like that anymore? You need to be able to actually find solutions to problems, identify problems, and build things that matter. So I spoke to my mentor, who is my mentor to this day, and one of the main reasons why I'm still in this country. And he said, why don't you do a master's in entrepreneurship? I was like, I didn't know that existed. So I started Googling, searching. Similar situation, applied the world over. The Ivy Leagues, the Oxbridges, UCL, University of Sydney, UNSW, UniMelb, got rejected by everyone once again because my GPA was 0.13% lower than the threshold. And so I wrote an appeal out to the dean at UniMelb at the Wade Institute of Entrepreneurship. I was like, my dad died, can you cut me some slack? I'll give you everything I have. And so I was very gratefully offered a position to come study, and that's how I ended up in sunny Melbourne. It's not very sunny this evening. Timed it brilliantly though. Arrived in February 2020. So we got 3 weeks before lockdown, and I think Melbourne, or Victoria, was the most locked down state in the world when it came to that. Leaving out a couple issues around how do you even fund this. I had obviously had no backing to come here, securing financing, securing other support to come down. And I remember getting on a call with my mentor, and I was like, I can maybe get some personal loans together to fund my living, but I don't know how to pay for this tuition. And I could maybe get like $10,000 together. He's like, how much else do you need? I was like, it's like 42 grand. And he's like, okay, go. I was like, what? He's like, go, I got you. Just make sure that when you're in a position to, you give it back so we can do it for someone else. And I've been very blessed and very grateful to have been able to have that opportunity in my life. I appreciate not everyone does, and so I've worked day in and day out from that point to make sure I'm in a position to be able to do that for someone else from that point forward. That's how I ended up here. And yeah, came down, lockdown happened in 3 weeks after we started campus. I pushed through, won the Hack the Crisis Australia Hackathon, launched a podcast to support young people on the path to entrepreneurship. We've had some amazing guests that have gone on to do some incredible things. One won Startup of the Year for Africa, another is a 17-year-old kid that got funding from the DoD in the US. Another friend of mine has reignited the creative scene in Portugal, where you couldn't be an independent artist. She's now set up studios and is a singer herself. Some awesome people that are doing awesome things, and most importantly, as part of that master's, set up my life's work, which is Inaam, which I'll get onto in a moment. But as a migrant, it's difficult to set up a business, to set up life in a new country. So over the years, to pay the bills, a couple short stints in private equity with the Harris family's private equity fund, set up a blockchain ESVCLP, which is an early stage venture capital and partnership, the bare bones of it, the skeletons, which would have been the country's first. Sadly, we weren't able to go ahead with that project. And then have been raising capital for private businesses the last few years, primarily a healthcare education group, and most recently the NDIA, so securing capital from Prime Minister's office to keep the scheme operational. I then looked at this very long list of things and thought to myself, people will think I'm crazy, so I should build somewhat of a semblance of a career, and that's when I reached out to the High Growth Ventures team. So that's what I do by day, where I combine the parts of my life that I love the most, which is helping other people, connecting capital to where it needs to go, and building community, and how I've ended up in that specific role, and bringing this back to Inaam, which is my life's work. My father was one of South Africa's leading entrepreneurs in pharmaceuticals. Both my parents were entrepreneurs, trailblazers in their own right. They set up a business when they moved to South Africa as part of that born free generation, once the apartheid regime was abolished, and they did really well for themselves. They built a name for themselves in healthcare and Ayurveda before Dabur and Himalaya were a thing. And whilst my father was great at business, sadly he wasn't the best at managing his own personal finances. he was taken advantage of whilst trying to make a difference, to invest ethically, and ended up losing his entire life savings in the hundreds of millions, and 5 years later lost his life. So not knowing how and where to invest cost us everything. As a young person, I now had to take care of mum, and I found myself in the same position, and I knew that I just cannot let any other family go through this ever again, and that's really the genesis of Inaam and where it comes from. And what we do at Inaam is we help young people that don't know how and where to invest to do so with an impact. And we do that by embedding investment literacy throughout the process, which allows us to curate custom micro portfolios from around the world for just $10 a month. You can then track your impact dollar for dollar. So trees planted, animals saved, renewable gigawatts of energy generated, carbon emissions prevented, as a direct result of your investment in these companies, with the end goal, the big grand vision, being becoming the impact engine of the future, where we redirect every dollar of capital on the planet into impact. We start off in the listed asset space, move on to debt markets, green bonds and blue bonds, impact in the workplace, where you mandate a portion of your salary into an Inaam impact portfolio, and finally impact in private markets, where we pool retail capital together to go into private projects. But none of this matters if we don't put our money where our mouth is. And so we've created an impact VC as part of Inaam's business operating model, where we reinvest a significant portion of our own profits back into the impact ecosystem to support underrepresented founders to access capital and build the businesses of the future. I guess I'll shut up there. That's a bit of a long-winded way of answering your question of how did we end up here, why did we create what we create, and what do we actually do. We can unpack the rest of that throughout the rest of this conversation. What we've seen around the world, and this applies not just in Australia but quite literally around the world, and I've worked across 3 continents and multiple markets to be able to say this, is we do a very good job of isolating things. So we have platforms and applications that are very good at execution, such as a zero brokerage app in Zerodha in India. You've got Stake and Superhero in Australia. You've got Robinhood in the US. Great at execution. And then you've got the other side of the spectrum, which is very good at literacy, such as Flux Finance in Australia, which is a literacy platform, and a bunch of others that have come out around the world. What we're not very good at is understanding how the brain's cognitive function actually operates at its peak, which is learning by doing. The only way you learn by doing is when you pair the execution with the literacy. And so that's really what Inaam focuses on, because most platforms have literacy in isolation and execution in isolation. We're bringing it together to really be able to make an impact, because the biggest problem we found with young people, with the new generation of investors, is they want to learn, they want to invest, they just don't know how or where. And that's really where Inaam comes to the forefront and the play, because other existing solutions such as an ETF or the S&P 500 or similar, or an ethical beta shares ETF in Australia, it's great. It's a consolidated investment portfolio, but it has more than 100 assets in it. As a newbie, as an investor coming in, how do you know what those assets mean, what the weighting of those assets are? You get a snippet of it, you don't get all of it. You don't get transparency or agency over the decisions on what those assets are, especially if you want to be an impact investor. And there's no transparency around the impact that's made. So we kind of combine all of that together. And the reason why it's a problem is your only next best solution is a brokerage app, where you have to try understand what you want to invest in without having a background or a layer of literacy embedded, or a financial advisor who off the gate charges you 10 grand, which in some instances is the total size of some people's portfolios, and it's just not accessible. And what we've seen is high net worth individuals, family offices, institutional investors for the last 2 decades have been investing in impact, but in private markets. And it hasn't been accessible to retail investors like you and I, purely because it's very expensive. And our thesis is, if we're really going to redirect capital into impact, you start in the listed asset space, purely because that's where the largest proportion of capital currently sits. There's $126 trillion of capital in the listed asset space. Less than 800 billion is in impact. So the delta for change of 99%, there are very few industries on the planet that provide that kind of scale to be able to change where money is directed and where it goes. That's why we're in the space, and why it's so important to solve this problem, and who is facing it, why the approach we've taken is embedding literacy and becoming a habit before people start building their wealth through postgraduate student clubs, affiliations, and similar. I think it's been a journey. We've been through lots of ups and downs. We've had a co-founder that was in the business and left. We've tried a partnership that these things don't always work out. We've had providers that we've partnered with that we've had to since decouple from, challenges in fundraising, challenges in actually building the product. But despite all of those, as of today, we've hit 3/5 of our fundraise is complete. We've built our prototype. We have access to 500,000 young Australians through our unique partnership strategy. We have just acquired the licensing rights to another fintech in the space, where we will be able to build our IP on top of that and shaves our development time by 6 months. We have a board of incredible individuals from Infosys, Computershare, the Paul Ramsey Foundation, Good Shepherd Australia, and incoming advisors who have helped build some of the world's most incredible fintechs. So we've built a team, we've built a board, we've built the thing, we have access to customers, we're 3/5 completed on our raise. It's now just a matter of putting something out. My board has asked me to put our first beta out in January, which scares me shitless because everything's finally fallen into place and coming together. So it's been a long journey. We have access now to a full retail FSL as well, through providers, and so it's really just a matter of bringing all the pieces of the puzzle together now and putting this out. And I think the hardest part of that is we do a very good job in the startup ecosystem or in building a business in general of having an image of what good looks like, but that's very different for everyone. Timelines are very different for everyone. And making peace with that for me has probably been the hardest part. We're still building a business. It may not look like that from the outside, but there's a lot that goes on behind the scenes. As I'm sure I think today's a great example of that. Before this podcast was being recorded, there's a lot that had to happen in this room for this to take place. And I think that's what people don't see. And we do a very good job of assuming things off the back of that. So I guess those are the milestones we've hit, which for us are very big milestones, and bigger ones even to come, which is closing. So I will lend to my life hero, who's Steve Jobs, and he always said the dots never connect looking forwards, they always connect looking backwards. And I very much agree that my previous experience is probably what's brought me here, and my current experience, which I'm unaware of, will take me wherever it takes me. Main reason being, if you pull those threads, impact has been embedded from day one through Africa Tikkun, and that's the core of Inaam. The investment banking piece came along after that, along with the management consulting, along with the startup experience and the fund management experience. The blockchain piece, which is how we're going to actually make private market investments accessible to retail investors, is where that fits in, through a DAO and through pooling retail capital together. And being able to sell, being able to talk, being able to connect with community and people is something that I've had to do throughout each and every one of those roles at various levels, whether they be investors, whether they be community, whether they be other stakeholders, whether they be team members. It's all culminated into contributing to this grand vision, which will continue to take shape and iterate. So I definitely think my past experience is what has enabled where I am today, and more so, I wouldn't deem them all as experiences. A lot of them have been failures, a lot of them have been lessons, hard lessons. Even in building Inaam to where it is today, I think I'm by no means an expert. I've made a lot of mistakes, and my closest friends have seen the results of those mistakes, both emotionally and otherwise around me, and how that they affect me. But when the problem is as big as the one you're trying to solve and is bigger than you've got to put those things aside. So the experiences are what got me here, both the good and the bad. And the bad ones are actually the ones that have helped generate the most positive turnarounds. They don't seem like it at the time. It's very hard. It's easier said than done. But something I guess that keeps me going through those experiences is, our success rate of getting through bad days is 100%. We're still here today. So as shit as it is, you keep going. I think one of the challenges I've faced, especially in securing investment, is the Australian venture capital ecosystem has done a great job of replicating Australia's oligopolistic economy in VC, and that's just a factor of how nascent the startup ecosystem and VC ecosystem is in Australia. There are 3 big funds, a few smaller ones, and a few angel syndicates thereafter. Now, what happens in those instances is there's a rush for deal flow, there's a rush for looking for things that are sexy, for looking for things that are not as difficult as they may seem to be, and not backing things that are very difficult, and that's fair. Everyone's an investor, you've got to make a return, you've got to make money, but the only way that changes is access to capital, unlocking more capital, and the availability of more liquidity in the market. So Inaam focuses on a part, especially the VC fund that Inaam's business operating model is centered on, the ecosystem and deal flow that is yet to be touched, which is underrepresented founders, which is people of color, women of color, founders from other backgrounds that are building amazing businesses that get overlooked due to incomplete data sets, due to the inability to access capital through traditional means or methods, due to business models that are solving problems that are not traditional, that are not going to be solved with a B2B approach, that are not going to be solved with a strategic investor or a strategic partnership, problems that can only be solved by those who are facing them. Similar to Inaam, we are a D2C fintech. We're doing one of the hardest possible things for a venture capital investor or any form of investor to invest in, because we are going directly after end consumers, which is historically very expensive, hard. It's a change of behavior, change of mindset, but we're coming into this knowing our niche, knowing the problem exists, knowing a solution is yet to actually tangibly address that problem. And so the end vision is to go through those challenges, find ways to deal with them, and we may not be the only ones. I know there are a bunch of other founders in similar positions to the ones I'm in, but having a future state ecosystem where the challenges we've been through are challenges we can make easier for others, and others may not have to face them. Because, if we were to compare this to US markets, to the UK markets, yes, they're still very difficult to raise in, it's still hard, but the appetite to fund businesses such as Inaam, to build and trust founders trying to solve really difficult problems, I believe is far greater than the current appetite in Australia. So being able to flip that by working closely with my peers in the space to make that a reality for others. And yes, it's hard, but it doesn't have to be as hard as it is. And trying to make it that incrementally bit easier until we really start rewarding people for their differences and their diversity. We know for a fact that female founders are far more efficient than their male counterparts, yet to this day I think the discrepancy is still only 3% of 3 or 4% of VC funding has gone to women. And I don't even want to double click into the woman of color statistic, because it's just abysmal and it's not good enough. If I had the ability to change that, I would do that, and that's what I try to do in every aspect of my life. But the true unlocking potential for that is capital, and the only way we do that is letting our actions speak, not our words, not our intentions, not our visions, and I hope and believe that Inaam will do that through its actions for others in the community. So that's my vision for the long term. I don't want anyone to have to struggle as much as me and my team have had to bring this to life. So there's a few factors at play there. A is trust in the financial ecosystem for the millennial generation, or the Gen Zs as we will. These are institutional archaic behemoths who have tried to catch up to their new demographic but remain ingrained in how big they are. These banks have been around for hundreds of years, and so innovation is starting. They all have innovation arms, they're trying to drive it, but is policies, by bureaucracy, by process and procedure, which is in place for the safety of their end consumer, which is fine. Businesses like Upbank, for example, are shifting that mold, disrupting that mold, being able to talk to their consumers in a way that no other institutional companies or financial institutions have. Now, that is possible by leveraging and embedding innovation in a way that makes sense to the new generation. And that hasn't been done for historical products. That hasn't been done for investing for a very long time, because investing is inherently something reserved for those that have money to invest. And that has also historically kept those with the ability to want to grow a portfolio or build something out of that cycle. So we're trying to break that cycle. You don't have to have insurmountable amounts of wealth to build more wealth. You can start building wealth today with as little as $100. It's a matter of making people aware that they can do that. And whilst literacy is available, like I mentioned, alluding to the first problem, it doesn't go hand in hand with execution. So you can't show people the benefits of learning if they cannot see the tangible outcomes, which is what we pair together, especially when it comes to impact investing. The reason why sustainability, ESG, and impact are so intertwined, they're all very different things and concepts, is the tangible results haven't been made available. And that's what we do. The data exists, especially with the listed space we're investing in. The data's there, but it hasn't been scraped in a way, in a legible format, to be, understood by the masses. It's published for analysts at Goldman Sachs, for financial advisors, for people in professional services. It's not published for the normal average Joe on the road, and that's the problem. It's almost like the industry keeps a glass ceiling, a barricade for everyone else to access it, so few can benefit from it. And that's really why it's such an important problem. And I'm not the only one trying to solve it. My approach is very different to the others trying to solve it. And I think that's why it's such an important problem, because we have, as large family offices in the world start transitioning their wealth into the new generation, that new generation does not want to manage the wealth the way their predecessors did. And they need a way to do it sustainably, to do it in a way that they believe their money can empower others. More is always asked of those that have more, but it can only be done if it stays true to what they're trying to achieve, which current systems are not equipped to do. Current systems are equipped to provide returns, which is not bad. If you're capitalistic, so be it, but not by keeping the benefit of others in mind. And impact historically has actually been a far more positive yielding and returns based asset class. It's just been kept restricted from the rest of the world. And that's why it's so important that we solve this, not only from an awareness perspective, but an execution perspective as well. If you, for example, earn, say, $10,000, the first step is understanding your current situation. Okay, I earn $10,000. What is my rental payment? What percentage? So people look at absolutes instead of percentages. What percentage of my income is actually going into rent, utilities, groceries, my living expenses, and all that, before you have kind of an understanding of your financial position. But the mistake everyone makes is they tend to save what's left or invest what's left and not start by saving, not start by investing. And that's what I've been teaching in financial literacy over the years as well, is you start by putting away the money you want to put away first, and you live off the rest. And so if you're earning 10,000 and you want to hit a goal of some kind, 10%, you put 10% of that money away. It's your investment fund. This stems back to the initial sort of investment and financial literacy question, which is you've got to understand your current financial position. And so something that I've been teaching across financial investment literacy over the last few years as well is, to get an understanding of your financial position, you need to know, okay, if I'm making $10,000, what proportion of my income is actually going into certain other elements of my life? Rent, or other things, groceries, utilities, phone bills, grooming, living, and all that kind of stuff, right? And so making sure that you're aware of your financial position and the percentage that goes into those various buckets is very important. Now the challenge is people are used to investing or saving what's left over. That's the problem. Whereas we should be starting by putting that bucket away first. So if you're earning $10,000 and you want to put 10% of your income away, you start by removing that 10% first, and you live off the 90%. And when you shift your perspective to that, you then also, at the end of that 90, will also have a little bit left over, and that's what you call your discretionary income. You don't treat what's left over as your discretionary saving. You put it away first, put it away for your future, and then you've got something left over. Maybe that you can do some discretionary splurging off of. Now that 10% that you put aside, and I know 10,000 probably is not the median average in Australia, it's probably closer to 4 or 5 grand. Similar percentages apply, is where you start looking to invest. Do you save? Do you put it in a term deposit? Do you buy some gold? Do you buy some shares, etc.? And that's where you really see the power of compounding. This is something we've all probably learned in grade 5 or grade 6. But that $100, we look at it and we say, $100, oh, it's not much, I'm not going to have a portfolio. What people don't see is the time horizon. So if you multiply that $100 by 12 months, you've got $1,200 at the end of the year. That's 1 year. You multiply that by 10 years, you've got $12,000 at the end of 10 years, but you're keeping on compounding. You're adding every month, and those returns compound every month as well, because the money is not staying static. Whereas if you keep that money as cash, It's actually, there's inflation costs to consume. Your money is not working for you. It's just sitting there. Whereas you want your money to work for you, and that's why even something as small as $100, putting it into something like an ETF, or putting it into gold, or putting it into a term deposit, means you're adding to it every month. And with Inaam, it's as easy as doing that, but it's focused on impact. So not only are you generating a return, but you're also generating a net positive benefit for the planet, which you can track dollar for dollar. And which human in their right mind wouldn't want to see their money benefiting others, doing good for others? The challenge has been people have thought, in the marketing and the society we live in today, that doing good comes at a premium, which means doing good doesn't actually return good benefits. Whereas the maths is completely opposite. Doing good has actually, in our funds that we've back tested, returned 25% more than large equity funds or ETFs or things that track the S&P 500. And so knowing that even that little amount over time is worth a lot. I guess another good example is your super. You don't see it till you retire, but it accumulates every month. And you don't see it, but something as simple as 10% of your income which is going to your super means thousands of dollars every year, every 5 years, every 10 years, and you're investing it, which means there is a return on that investment. So shifting the mindset and the horizon of thinking in decades instead of quarters or months really helps put that $100 into perspective. So I guess that's probably the easiest example I can put. And at Inaam, we'll also have it. Okay, what's your current income level? Right, so we think that this is probably how much you should be investing. We're targeting $500 to $1,000 a month for people to invest in our portfolios because of the median incomes, the types of customers we're trying to attract, which is 18 to 30-year-old young Australians earning income that are socially aware. And trust becomes very important there, which financial institutions and advisors and other things currently don't have, and they're too expensive. If you want to replicate what we're trying to do at Inaam yourself, the closest competitor through a brokerage firm would cost you 5 times as much as what we charge. So I think bringing that cost-benefit analysis, ensuring that your $100 is going a long way, becomes very important, and knowing how. And I think that knowing how is where we bring in the value. So we're obviously pre-revenue at the moment, and we are tied by AFSL compliances, so I can't share exact details. But one of our back-tested portfolios, specifically in the energy space, we've been tracking for the last 3 years, focuses on 3 to 5 large energy producers. One is a renewable energy manufacturer, so they're in the US, Japanese company, and there's a Canadian company in the solar, the wind, and renewable energy space. We started putting like hundreds of dollars kind of every month into it, and that portfolio has returned 25% year on year over the last 3 years, including COVID. So yeah, that's an example of one of our funds performing well, and we focus on renewable energy, sustainable agriculture, sustainable consumption, well-being, and other forms of generic impact. I get asked this a lot. I never have a decent enough answer other than, I guess, discipline. You get the job done. You allocate the time you need to get the job done, and you get it done well. Life has afforded us all amazing opportunities. It's what we make of them, and make the best of that time that we're here for. Our time is limited, and understanding how efficient and effective you can be in that time becomes very important. So I think I do still find time to, none of this will matter if I can't take care of myself. So I need to take care of myself. I find time to run. This year has been very, very strenuous on my body. I find time for those around me that are very important to me, whether it be my partner, my friends, my family, my mother, who is the most important person in my life as well. You need to find time to do these things, because entrepreneurship is a lonely journey. Making sure you have the right tribe around you, making sure you have the right people around you, making sure you're taking care of yourself becomes important, because if you don't, the other things fall away. Yes, the vision is important. Yes, the dream is important. Yes, the job is important. Community is important. But if you are not taking care of yourself, you won't be able to show up as your best self in front of that. So that's a personal journey, a very kind of, emotional mindset piece, physical mindset piece, and showing up for yourself piece, and learning to love yourself piece. But knowing that those things are important before you commit to the other things, so that you can show up well to the other things. This is how you show up well. And just being committed to the goal. You get the job done. And I think South Asian entrepreneurs are very good at that. Yes, life's hard. Yes, there are challenges. But we show up, We show up when we don't want to, and that's what matters. Be prepared for it to take twice as long or thrice as long as you think it will take. Be prepared for the rejection. And if the problem you're solving you have conviction on and you believe in, don't give up until it's done. It's going to be hard. Your conviction and belief in the problem is what's going to get you out of bed, no matter what happens. Just don't stop until it's done. The flip side is you need to know when to stop. If something's not going to work, that's very important. Heed advice. Take advice, listen and learn. When you believe in something enough, don't stop until it's done or until you know that it can't be done. I guess we'll tell you about the Inaam journey. I've been told multiple times, this is not going to work. You have a full-time job. You've had full-time jobs. Your raise has taken so long. You should have launched by now. You're not from here. What do you know about running a business? It's direct to consumer. It's going to be very hard. It needs a lot more capital. These are all valid points. And with data points that currently exist in the world, it may fail. But I won't have that answer until the product is out in the market, and my duty and responsibility is to get it out. What happens after that is something I can control. And something that I can't fully control, but something that I can deal with. Until that point, my belief and conviction in the problem is what gets me out of bed every morning to solve that problem, to make sure it gets addressed. What happens thereafter? Things change, we iterate, we pivot, but nothing can be said about the thing until it's out there. And I think understanding that has been very difficult for me. I've come to the point where the other indicators are there, why it might fail, but the indicators of why it might succeed are far greater than the ones that indicate it might not work. And as South Asian entrepreneurs, we can take $1 far further than our other Anglo counterparts. It's not, I'm not trying to be cheeky here, it's just a fact of life. If you look at some of the largest enterprises in the world today, they are run by South Asian CEOs. Why? Because they're efficient, because they know how to get $1 further than anyone else can. And so I know that if there is a standard set to me of what looks like normal, and my life is in no way normal or linear, I will not bend to that standard. I will find a different way to do it. I will find a way to make it work, and that's what we've done with Inaam so far and what we will continue to do. We won't be traditional. We won't follow the mold of what a traditional startup or a fintech or a D2C business needs to look like, and that is actually our strength, because we will learn more. We have learned more. We will continue to learn more. We'll continue to fail. But because of the importance and the goal being bigger than all of us involved, we will keep going until it's done. So this is something I love doing, and I help a lot of founders with and advise them a lot, is you need to actually have insights. You need to understand the problem you're trying to solve. I think the challenge is people come up with a solution or an idea, they're like, oh, this is great. Retrofitting a solution to a problem is the worst possible thing you can do as an entrepreneur. It needs to happen the other way around. You need to find a problem, an actual issue, a pain point in people's lives that you can then find a solution to address with. And the only way that happens is talking to people. The only way we validated that the problem I thought existed in my head from my own lived experience, I could have been the only person in the world that had this problem with investment, but the only way we realized it's an actual problem for other people is talking to other people and not asking yes or no questions of, do you invest? Yes. Do you not invest? No. Actually understanding, okay, if you're trying to make an investment, what's the process you follow? And uncovering insights through those interviews, through those discussions. Each of these lasted 30 to 40 minutes of how people invest, how they decide to invest, what processes they follow. And that's when we realized people want to do this thing, but they have no clue, no hope of how to actually do it. And they are inundated and overwhelmed with options around the world of how to invest, where to invest. But none of them teach them the core values of what it actually means to invest, what decisions they need to make, how they need to think about making an investment. No one's really teaching them that stuff. They're giving them things to do to invest, but no one's telling them how to use the damn thing. And that's how we uncovered our problem, that people actually want to invest. They just don't know how or where to do so. And so that's the level of insight you need to strive for. A couple other examples are, this was taught to us during our master's program actually, was, have you seen the Segways? The two-wheel thing. So the guy that invented that kept hooting on about, oh, I'm changing mobility for the world. It's going to be the next big thing. He never spoke to a single person, never spoke to a single customer, never spoke to a single investor. He just went and did it. When he unveiled it, people were like, huh, what's that? How's that going to change mobility? And today we see it used in shopping centers as security mobile car. That's what happens when you don't actually talk to the people you're trying to solve the problem for. Like, do you actually want a Segway? Will you actually ride it? Will you take it somewhere? And one example that really stuck with me is in Nepal. There's a village where a lot of women were giving birth to children, but they would sadly pass, and trigger warning for whoever's watching, because of inefficient care. And it was very cold, in that specific area in Nepal. So they sent and assembled a team of genius doctors and medical professionals to go understand why these children were not surviving childbirth. They assumed it was the cold temperature, so they thought we should build hospitals up here, we should do this and that. And what they realized was, it was not that they were dying because of where they were being born, or not surviving childbirth because of where they were being born. After childbirth, in order to get the care they needed to be transported from that specific area to a hospital. But the temperatures were so dire, and the conditions in which these children were transported to the hospital so dire, that they would not make that journey. So what they eventually ended up creating was a mobile incubator that could take care of those children once they were born, to then get taken to the hospital, taken care of, and survive. The solution was not $100 million to build a hospital. The solution was a plastic incubator that would keep those children safe until they got to the hospital, to then prolong their life. So that would only happen through insights, by spending time on the ground with the mothers, with the families, with the professionals in that area, to understand what the actual problem was. So understanding what a problem is gives you the ability to then start thinking, okay, what are the pain points? What are the actual challenges? Who's facing the problem? Who is my customer? Who am I solving this problem for? And that's the other thing you need to solve for. You have a problem, great, but whose problem is it? Who is facing that pain point? Who is your customer? And then you say, okay, how am I going to solve it? And the only way you can do that effectively is by zooming out and building a process map. What is the process followed currently to solve the problem? What is the bottleneck? What is the thing that is making it hard? How can you make it more efficient? And that's when you step in with your solution and say, actually, I've now understood the problem. I've understood who is impacted by the problem, and now I can come in with a solution that addresses that specific pain point for that specific customer that is willing to pay for it. DoorDash, great example. The first MVP they put out was a website with PDF pictures of the restaurants in the Bay Area because students wanted food late at night. Worst fucking UI. Didn't work, didn't function, no ordering capabilities. But people would go onto it, order food, and restaurants actually wanted more business. And they would deliver, they would provide the food. Problem being solved. Students need food. It's late at night. Where do they go? How do they order? Website set up, done. People will pay for it because you're solving a problem. Even with Inaam, our current website, horrific. I do not like it. People are signing up without me doing anything, without me posting anything, because they believe in the problem that we're trying to solve for them, and the pain point. We're a niche. We're not for everyone, and it's fine. If you don't believe in impact and you don't care about investing in impact, you're not for us, and that's fine. We're okay with that. But we know our customer. We know the problem they're trying to solve, and we're the solution that's going to solve that problem. So that's the end-to-end process of identify the problem, identify who it's being solved for, why it's a pain point for them, find a solution, and if it's a burning enough problem, they will pay for it. They will put money down to have that problem solved for themselves, and that's when you start thinking about building a... People build the business first in their head, and they do the back of the envelope calculations of, I can acquire this thing for $10, I can sell it for $20, my cost is $2, so I will make $8 profit. That is a far-fetched scenario. Life doesn't always work that way. You've got to be making sure you're solving a problem before you start even looking at economics. You'll notice in this entire discussion of me explaining to you the problem to solution part, I never mentioned economics once. Those economics fall into place once you've understood that your solution actually solves a problem for someone and someone is willing to pay for it. Then you can start discussing, okay, how much is it going to cost me to make this solution? How much are people going to be willing to pay for it? Do I have the ability to run a successful, profitable enterprise off the back of this? And that's when you actually think to yourself and say, I have a business. I have a shot at potentially building a business. And then you start testing and iterating, because what you put out the first time won't be great. People won't like it. You won't like it, but that's when you learn, you fail, and you iterate, you grow, and you finally find a niche solution. I think one of the core principles of Inaam, of why we're here, is regulatory arbitrage. Australia has the world's most onerous and complex financial regulations. The other financial regulatory bodies in the world, such as SEBI in India, the SEC in the US, the FCA in the UK, have a stance that if you are complying with a more onerous financial regulation than ours, we are comfortable with your compliance and you are welcome to start complying with our regulations as well. It doesn't make it any easier other than your ability to access compliance and licensing in those geographies is a bit easier. So Inaam's growth from day one has been, okay, are we actually solving a problem? So that was step one. Do people other than myself and those around me actually experience this problem? Validating that was step one. We validated that and we understood that through interviews, through surveys. Step two was, okay, how do we solve this problem? What are we going to do to build it? We initially, I think one of our early pitch decks was trying to bring impact investing by democratizing, and this confused everyone other than myself at the time, providing access to barrels of cheese and wine cellars. And people were like, how is that impact? There was more democratization play, but it was an easier asset class at the time, and I was like, actually, this makes zero sense. It doesn't actually help solve the problem. We're like, okay, what are the asset classes that make sense to solve this problem? And we're like, listed equities, because easy to teach, easy to explain, easy to access. And as easy as it was on paper, we then realized, okay, hold on. If you're going to provide access to listed securities to people, you need a license. You need a retail Australian financial services license. How do you apply for one? How do you access one? Then we're like, okay, but once we do that, how do we provide people access to it? What tech stack do we need? We need to access brokerages, we need to access a trustee, we need to access a custodian, we need to access a payments provider, we need to access tech that can handle this kind of volume and traffic, and then a financial structure that actually speaks to these investments. So we have to set up a multi-class unit trust fund, for example, so people are able to invest. We want to provide people customization, because that's the empowering aspect of Inaam. How do we do that? So these questions started coming, then we started addressing each of them bit by bit by bit. Then we're like, okay, this on paper makes sense, but what does it actually look like? We needed to build an MVP, we need to build a click-through prototype of how will people interact with this thing, how will it function. So that was step 3 or 4 along the process. Build the prototype, then take it to people, test it to people. People hated it. They were like, I kind of get it, but I don't know how to use it. And so we've since had to then, okay, we need more money. At this point, we were like, okay, people want to use this thing and they want to iterate and build on it, but we need to build it, and that's going to cost money. And that's when we were like, okay, now we need to start raising capital. Then we need to start preparing for how to raise capital, making a pitch deck, making a plan, being able to have a narrative to go to with investors, an actual investment proposition. What are the terms on which people are going to invest? What are people getting in return for their investment? Having investment conversations. We've had over 100 rejections from investors in Australia, but each one has taught us something. It has given us a point of feedback, some which we have to disregard because they don't stay true to what Inaam is and what Inaam wants to achieve. Some that we're like, we didn't think of that. That's an important perspective, which we've now embedded and iterated our pitch deck. Our pitch deck has gone through hundreds of iterations, because every time we got a no, we took a step back, we learned from it, we acknowledged it, and we improved the business to the point now where we know. And we also needed to then think about, how do we get to our customers? Do we market on where they're available? Do we partner? Do we have strategic partnerships? That's how we went through the postgraduate student clubs and affiliations route. Picking all of these pieces of the puzzles, we've now gotten to the point where we have a clear problem, we have a clear solution, we have a clear customer, we have a clear distribution and customer acquisition strategy, we have a tech stack of how we're actually going to implement this with external partners, in-house builds and plans of what the platform will look like. And we have the ability to now raise capital, and we've successfully raised capital, which we've now deployed into the business to acquire other businesses and assets, to build our business and assets, to build partnerships, to get our kind of books in order and affairs in order. And so once our raise is complete, the next steps look like, okay, we put the product out in 3 months, we get our first 20,000 customers, we get our first $10 million in AUM, but that's the starting point, that's when the real work starts. The next piece is, okay, we need to scale to our next geography, we need to scale within Australia itself. So how do we take that AUM from 10 mil to 100 mil? Our 20,000 customers to 100,000. And our build and our actual software with more features to enable retention, to enable people to stay, to enable people to invest more. And then we say, okay, which geography are we going to go to next? So the next 5 years are choosing between Europe, India, or the US. We're mostly targeting APAC or Europe. We could even do 2 at the same time, which is probably very difficult. I'll probably be told not to do that. We'll see how we go at that point. Gift City looks very attractive at the moment to us. given the ability to operate a financial services product outside of a special economic zone. So we'll head up, run operations here, plug and play, and launch in another geography and build a playbook of how to launch in another geography, so we're able to then replicate that playbook in other geographies. Because in essence, nothing changes in the tech, nothing changes in the distribution strategy. There's a university in every country on the planet. The only thing that changes is the need and access to a financial license and kind of marketing material on the ground, which is what we then intend to capitalize on and launch and scale globally. So I think a lot of people predicted this for a very long time around Bitcoin's going to hit $100,000, and everyone was like, oh, that's not going to be the case. This is speculative, this is whatever. So I guess I've been involved with that side of the world from early days. I know it was incepted back in 08, 09 by Satoshi after the Great Recession and the crisis. And it eventually came to the rest of the world around the 2010s, 2012s, 2015s, which is when I started getting involved. I think what is important to understand is the scarcity and the economic principles behind a specific token on the blockchain called Bitcoin. Blockchain and Bitcoin are two different things. Bitcoin is a currency, blockchain is the technology that enables that currency. But Bitcoin specifically is currently acting as a store of value, because there is a finite amount of that specific digital token that will ever exist in the world, which I think is at 21 million or something. And every 4 years, it becomes more difficult to create more Bitcoins, because the difficulty of the algorithms required to mine said Bitcoins on its blockchain increases by a certain factor, which is exponential in most instances. And so that is actually not too dissimilar to gold, because on planet Earth there is a very finite amount of gold, which is why if you measure gold as a historical store of value, it has consistently increased in value over time, because over time there is less and less of it available, which means it becomes more valuable. And that is a similar economic principle you see in the specific currency associated with blockchain, which is Bitcoin. Now, what happened a decade ago, is other tokens and other blockchains emerged, other protocols emerged, such as Ethereum, Doge meme coins, and a bunch like Polychain and a bunch of other chains. What happens in those instances is they try to create their own economy or their own value. Back in 2015, they were all uncorrelated, almost to a 1-to-1 degree. If Bitcoin went up, the others would go down. In 2016, what happened was they all started correlating with one another. Not to a 1-to-1 ratio, but if Bitcoin would go up, Ethereum would go up, altcoins would go up, Dogecoins, every other coins would go up too. And that's what caused the speculative market and the tulip bulb phenomenon, and what caused a lot of things like ICOs, an initial coin offering, which is not too dissimilar for most to a Ponzi scheme, which is a very quick way to raise capital. You then had your NFT boom, which was digital kind of tokens that had value assimilated and associated to them. I think the Bored Ape Yacht Club NFTs were selling for millions of dollars or hundreds of thousands of dollars. What's his name? The fighter, the Logan Paul, bought something for $500,000-$600,000. It's currently worth $6. So those were things that didn't actually have utility and didn't have value added to the market, which made there are lots of staunch blockchain supporters, and blockchain as a technology is fantastic. It's enabled a lot of things. Being an immutable ledger means things like audit, security, process, and procedure are actually safe. People have started using a blockchain for real estate management, because it's hard to keep trust deeds. It's hard to keep trust deeds sort of managed in old school paper format. And so making sure that it is managed well and can be tracked, and if someone's property has changed hands over decades or centuries, you can measure that, and it's not privy to fraud. People have also started using it in agriculture and pharmacy. For things like making sure that a drug is not a fake. So it's tracked from the time it's made in the factory to the time it's sold in the pharmacy place. Agriculture, similar with grains, that from the time it's milled from the farm to the time it's delivered at the thing. Those are really good use cases and value additive natures of blockchain as a technology. The con side of that is, currency exchange, conversions from fiat to crypto, and where that money actually goes. Is it funding terrorism? Is it funding narcotics? Is it funding, things it shouldn't be funding, which it does. Every even normal fiat currency does that. But not being able to track that, I guess, is the real struggle and the real problem. And so ensuring that blockchain is actually used as a technology and not just a store of value or an ability to make insurmountable amounts of wealth is important. I think some of the big banks tried using it and it blew up. I think Goldman and JP currently are the second biggest holders of Bitcoin. Or sorry, I think it's Blackstone, second biggest holder of Bitcoin globally after Satoshi's actual store of value, which shows there is appetite. But what people also tend to forget with store of value is stores of value are only activated when there is negative sentiment at the market. So the recent election with Donald Trump is an indicator of people putting more money into gold, putting more money into blockchain, taking money out of the markets, some putting it back into the markets. But when you put it into gold, bonds and other stores of value, there's an artificial prop of other markets because that money is safe and is generating returns. Those returns then go towards funding other things, which create the illusion that the whole market is performing very well. So I guess this is just economics and what you learn and pick up around being privy to these things and understanding these things becomes important, so that you don't start believing in fairy tales of if you put $1,000 into Bitcoin today, you'll have $10,000 tomorrow. And that requires another literacy piece. So I think as a technology, blockchain has a lot of potential and can be used for good. DAOs, which are decentralized autonomous organizations, are an example of that. Inaam will be using a DAO. We've been working with Swinburne University of Technology to create the foundations of how we will pool capital together to go into impact using a DAO. But there are other use cases that I think governance plays a very important role for. Which is where being careful with blockchain comes into place. So I guess with every technology, learn the ability to use it for good and govern the ability to use it for bad. So yeah, India's been doing it with grains, with farmers. Africa's been doing it with drugs, because you get counterfeit drugs that are unsafe. So it's helped a lot, but it's also done a lot of damage, I think, primarily environmental. Until we find more efficient ways of cooling these farms that are mining various and running various blockchains. I think there are certain mines that are using up more power than certain countries on the planet. That's not healthy. It's going to cause a lot of problems for a lot of people down the track. So again, that's where impact investment comes into place, which if you're not funding companies that will try and make consumption more efficient, we're just going to end up with a world that is on fire, which it currently is. So, yeah. Geopolitics don't help either. So I think my message to whoever's listening is something that helps me get out of bed every day. I've stuck to it for a very long time and will continue to stick to it. I think everyone around me is probably tired of hearing it, but it's what's gotten me through everything. Is we're all here to make a dent in the universe, else why even be here? If you've seen my wallpaper, you'll know where that comes from, but Steve Jobs said that a very long time ago, and so I strive every day to try and make that dent, and will continue to try making my dent on the universe. So I guess my final words would be, go make your fucking dent, because that's why we're on this planet.